All right, I guess we're rolling. We on? All right. Hey guys, how's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's look at Bitcoin. Let's continue with these videos. Let's continue tracking the price action. We've got some action, right? We had a little bit of a sell-off, a little bit of a drop, didn't we? Where Bitcoin actually entered 80,000, the $80,000 realm in the 80s. So yeah, we've been calling for that for a month and a half now. So, all right, let's see where we go from here. We're making headway in this technical analysis. Now, you need to understand that and see that where we marked down, we immediately came back up into the structure of this expanding triangle, if you would, and then you look down at the volume spread. We see that we still have predominance of supply. You see those supply bars building. Okay. And the demand candle that brought us back in, or the demand spike that brought us back in, is actually quite large. Now you can't really see it on the 8 hour, but if we put it on the 4 hour, check this out, man. Put it on the 4 hour. Boom. You see that? Get this arrow out of the way. Look at all that. Look at all that demand. Look at that demand power. Last time we saw demand this big was over here, and that was for the UTAD. This is the E area. This is the 5 wave, the top of the 5 that marked down from the top of this ascending channel, where we broke structure here. Remember, and we fell through the ice, and then that started this whole new range that we're in with these expanding waves, these distributive waves. So we haven't seen. That was the last time we saw this kind of volume, really. And so, but I mean, that volume brought us all the way up to the top, to the all-time high. This volume just got us. See how much we corrected off that for about 5%. All right, about 5%. So that's not bad. That's not bad, but still, it wasn't enough to propel us through the anchored VWAP, and that's what matters. That's the litmus test, really, is getting through the ice. You know that once we get through the ice, we jump the creek, and then when we jump the creek, then we're on way to we begin to take on more of a decidedly bullish bias. But we haven't done that yet, so we kind of got stopped out here. So now I want to focus on this area in this circle here, but in order to do that, I want to get the close up details. I want to scrutinize it, so I'm going to increase the magnification. And for that, I guess we'll go to here. I have the chart. I have this area here pulled up on another chart here. That's this area. So this is this magnified. So on the 15 minute. What does that look like to you? Do you see a similarity anywhere? I tell you, man, these fractals are cool, aren't they? So we have an expanding triangle there as well. And inside here, there's an expanding triangle. We got this little guy. All right. And the waves are distributional. And we see that it distributed, right? So we want to see now that we're hugging this macro trend support line in this expanding triangle. We want to see if the distributional bias has continued. We had distribution here. We had distribution here. What about here? If we distribute here, that means we're going to break this structure, and if we break this structure, then we can count on the price retracing all the way back down to this area. Now this is the next. This is the next stop down. This LV, this green area here, this green zone, which is actually a liquidity void. This is a major liquidity void where the preliminary supply started. The preliminary supply, as you know, is the area where after a mega pump like we had, the Trump pump, the preliminary supply is where basically the lights come on and the party's over. And then from there we have a distribution process play out of market makers creating these waves, these expanding waves that get bigger and bigger. Because they're buying here, and then they're pumping the price and selling, and they're selling into the pumps each time. So that's the reason why these waves expand. And then we saw the same thing here. It broke structure, and then this, you see the the wave's growing and growing, and then it retraces again, kind of like we saw here. And then we go over to the fractal. We really see it in the fractal, this, growing, 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 and then distribution. So, and it doesn't matter that we came back up. We came back up, but it took a lot of effort to come back up. The result, I don't think, was worth the effort, and so that is a continuation of a bullish weakness to me. So we're going to have to see what it does. What I'm expecting now is if we're not able to go through this ice barrier, then it's only going to make a certain amount of tries before it comes back down and touches the this support line again. Now this support line is this here, this line, and that would be like 1, 2, 3, 4, 5. That would have been 6 touchdowns on that. Now, usually after a certain amount of touchdowns, usually no more than like 5 or 6. Usually that's enough to break through. It just, as it were, the Bulls just give up and the Bears take over, and then we fall through. And like I said, if we fall through, then it looks like it's a free fall down to this liquidity void area of 84,000. Let's just say 84 to 87 is where I'm looking at, 87K. And so in this area, if we fall down here, then this is kind of like what happened in 2021 with Bitcoin. If you go back and look at the chart, and then we had a period of reconsolidation, and then it started marking back up, creating kind of like an inverted head and shoulders, and then it would go on to actually make an all-time high, and so we had a whole new bull cycle start up, and then we had a new buying climax, and it went through these series of up thrusts just like here, and the highest high created an all-time high. So we could see something like that play out here as well. To know how high it goes, we'll just have to figure it out. If it marks back up, we'll do the Fibonacci extensions off the buying climax, so we can get a number for that too. But that's only if it marks up. So we don't see that happening just yet. We still have a bearish distributional bias, especially if this area here, and we could look at this area forensically too. We'll just give it a day or so, and then I'll go in and we can reevaluate this area with the volume spread analysis and see what it's looking to do. But if the prognostication is bearish and going back down to retest this macro trend support line, then I think that this, mitigating this liquidity void down here underneath the preliminary supply is pretty much inevitable. So we'll just have to see that. Now we can go off other charts in the meantime. We could look at, for example, the market cap dominance for Bitcoin, Bitcoin's market cap, and what do we see? Well, we see a series of rising wedges coming off this. Now again, this isn't price action. This is market cap dominance, but still we can call this top area where it had its peak dominance the buying climax, and then that would make this the ending of this wave here of this 5 down. I think this is a zigzag pattern actually. So this would be the 5 here. Zigzags are 5, 3, 5. So this would be a 5 Elliott wave down, and then this would be the 3, 1, 2, 3, and then we can expect another 5 to come back down and mitigate the secondary test in B, creating in effect a new lateral trading range. Usually these these selling climaxes, after they shoot up and create automatic rallies, at some point they come back down and mitigate the support line. You see them in all the rallies and all price action, rallies and Wyckoff rallies, whether it be, and it's the same for accumulation or distribution. They all have this genesis, if you will, of either a buying climax or a selling climax, going up to the automatic rally or down to the automatic rally, and then reversing to create the secondary test. So we see that in all of them. So we can kind of expect that at some point. It just doesn't come down in a straight line. It takes its time getting there, and it has micro rallies sometimes in between. But at some point the wave makes it down, and we see this we see this mitigation. And I think that if the chart that we just looked at, if Bitcoin's price action makes it down, falls through the support line of this expanded triangle that we were looking at on the fractals, and makes it way down to the liquidity void, we're gonna see the market cap dominance of Bitcoin fall as well, and fall in tandem with it, and create this this mitigation along with the selling climax along the support line of the trading range for the market cap dominance chart. And then finally, if we go to let's just take it to the dollar index. We'll put this on a daily and look and see what it's doing. The dollar index, is kind of like does the opposite of Bitcoin. So if Bitcoin is up, usually the dollar index is down, and vice versa. So this is the current dollar index. I already looked at it, and I shared this with my group today. But the dollar index has created a classic Wyckoff accumulation range, so it's expected to gain strength. So if the dollar is gaining strength, or it looks like the price action is gaining strength, then we can kind of expect Bitcoin at some point to lose dominance, as long as this continues on its trajectory. And I think what it's gunning for is the mitigation of this liquidity void up here at the buying climax. That's usually what happens with these accumulation ranges. They go back up. You know how like water always seeks its own level. Well, price action seeks its own level too. After mitigating the lows, it comes back up and it hits the highs, and then from here it just remains to be seen. But I mean, we have all the classic indications of a Wyckoff accumulation. We have the selling climax, the automatic rally with the ST. See, oh yeah, here's that mitigation I was telling you about. See, we usually see the mitigation. It's usually it either mitigates the first secondary test or the secondary test in B. But at some point the lows, water finds its own level again, just like price action, and then it goes up from here once the lows have been retested. So that's what's happened in this range. And then here I want to show you where it jumped the creek. This is imperative. This is vital for an accumulation range. It needs to jump the creek at some point, and it's usually after a spring. Now this spring didn't go as low, but it doesn't matter. It's still this would be a Wyckoff accumulation, I believe, number 2. The spring doesn't go as low as it goes as in schematic number 1. So this is more like a schematic number 2, where the spring is along the same line as the secondary test. But then it marks up, and then we see that the price goes through the anchored VWAP, or what I use as the ice barrier. And then here, look, right where it went up through the ice, you see this? We have volume confirmation. You see this large demand spike in the vertical bar? Yeah, this is a legit markup. That's a legit markup. Anytime you see price action going up through the ice, or up through a creek, or down through the ice, and you have corresponding volume, whether it be supply or demand in the vertical bar, in this precise area, then that usually certifies or justifies the whatever direction the price is headed. So we had the certification of a bullish impulse, and it followed through. We had the backup even here, the backup LPS, where it tests where it flips the support, tests it, and then continues to mark up with a sign of strength. So I contend that that the dollar index is gunning to close out the buying climax here, and if it does that, then Bitcoin should be going in the opposite direction. Right now we don't see it as much, but if this continues on, say it just consolidates a little bit and then reaccumulates and then shoots back up, then we should see Bitcoin again going down, especially if it's looking to break through the support line again of that expanding fractal triangle that we looked at on the first charts. And Bitcoin's gunning for that lower liquidity void by the preliminary supply, and at the same time the dollar is gunning to close out the liquidity void at the top of the buying climax, then that would jibe with each other. And then and then we already looked at the Bitcoin market cap dominance, looking to mitigate the selling climax and the automatic. I'm sorry, the secondary test on that range. So I know there's a lot of information in this, but if you can go back and look at it and look at the charts and kind of give you something to think about. But that's about it for me for now. I just wanted to fill you in on this little update. If you got anything out of this, like, subscribe. Track Bitcoin all the time. If you're serious about making money and staying safe in the crypto markets, check out our Discord group. I keep it affordable, $20 a month. There's just no BS. I'm not a shiller. I don't. I'm not a perma bull or a perma bear. I just tell it as it is, and I put my own money in these trades. I'm not a financial advisor, but I have been doing this since 2017, and I've had very, very good success, especially in swinging the alts and doing the Elliott wave and the Fibonacci's, the Fibonacci target ratios and all that. So keep watching the videos. You could benefit greatly off this. But like I said, if you want to take your trading up to another notch and actually get access to, where I could kind of answer some of your questions personally, I could kind of look at some of the coins you're interested in, and also you would have access to some of my swing charts that I do. I put all my swing charts in there with my preliminary entries and exits along with the Fibonacci ratios. Like I said, it's $20 a month. Take it or leave it. It's fine. But yeah, like, subscribe definitely if you got something out of this. And I'll talk to you guys soon. Be safe in the markets. Again, it's not financial advice. Yeah, be safe. Adios, guys. Bye bye, amigos.